I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing, and today we're going to continue talking about orders. So today we'll be discussing the OCO order, or the one cancels the other order. So very important to get this right, understand this while you're trading. It can actually improve your gains, decrease your losses, or help to mitigate losses, and really, really important. I use this every single day. All right, so again, OCO orders, what does that mean? It means exactly what it sounds like. One cancels the other order. Here's the definition from Investopedia. So it's a pair of conditional orders stipulating that if one order executes, then the other order is automatically canceled, right? So what do I mean by that? This is actually my brokerage account. I use Thinkorswim. It used to be TD Ameritrade. Now it's Charles Schwab. A couple things going on here. So you can see here, this is actually Apple's Apple stock, and you can see here that you have the quantity. I just have one share listed here. You can see this is kind of my order book, right? Here are all the different prices. If you look on the other part of the screen, you have your bid and your ask. This is where the stock is trading right now, 196.02. You can also see here template. I talked a little bit about this during the last episode and told you I would go into it a little more. Now I have my own specific template set up. I call it JB OCO with stop. And basically what that is it's a template that I set up that when I click buy on a stock, I automatically have my stop put in and my profit level, right? So what this is, it's kind of a multifactorial, one cancels the other order. It's three orders all at once, okay? So you can literally click this button and walk away from your screen. You set up a trade, you say, all right, this is, looks like a great level. I'm going to click that button, I'm getting into the stock. If it gets below my support here, for example, I'm going to stop out. If it gets up to my target point, I'm getting out of the trade, taking that profit. And it really does decrease the amount of stress you have in the trade because you already have your plan set up. So again, I would get into the stock here by clicking this button, buy, a limit order buy. This would be a market order stop, and this would be a limit order sell on my price target. You can see here 4% for my limit order. You can see 4% right here. So essentially, if the stock rises 4% from this level, I would make 4% on the stock, and 3% is my stop level. Okay, we talked about time and force here on the previous episode. If you didn't see that, go back and watch that. You have day, EXT, AM. You have those different orders, okay? But now we're focused on the OCO order. How are we actually trading intraday? How do I trade intraday? This is exactly how I do it. And this is a little more advanced, right, than just, buying the ask or selling the bid or putting buy limit orders in and then sell limit orders. It essentially is a little more complex, but it really can help you maximize your profits and really keep your losses limited. So very good. Let's move on to the next screen here. And you can see here that I actually entered this trade for you guys to show you what this is like. So I got in one position here, 195.89, one share of Apple stock. And you can see that the price rose a little bit, so I'm slightly in the money. And now I say, all right, well, I'd like to take profits and also set my stop. What I did is I just entered here without doing my OCO order. What you can do is you can either enter with an OCO order, like I had on the previous screen, okay? Let me just show you this here. You can enter like this, or you can go back up to your template and just say, regular or normal, depends on your brokerage what it says, and you can get into the stock, all right, by buying it, And then you can actually go in and set a separate OCO order. You can put your profit level here, right? Your limit order right here at 196.09, for example, and then put your stop here. And usually you'll have a pop-up on the screen that says, should I link these orders? And that's typically what we do. So let me show you here. All right. So I'm in the stock. I've put my limit order for my profit target, 196.15, and now I want to put my stop in. And you can see when I went to click my stop right here, okay, it says this position has an existing closing order, and in order to continue, you have to link these two orders as an OCO bracket. All right, that's a one cancels the other. In other words, if this price comes up to this level here, this order triggers and this order gets canceled, because you can't really have two orders out at the same time. Now, if this price comes down here and the stop gets hit, then this order gets canceled. That's what OCO means, okay? Very, very important to understand that. So this is, let's just see here. So this is on the short side. It's the same thing, same concept, flipped upside down. I'm in short now, Apple, 1 share short. And now I've put my stop limit here, right? Essentially buy to cover, stop. Here's my average, here's my entry price, okay? Here's my stop, and here's my OCO for my limit, right? Here's my target, and here's my stop. So very important to understand how this works. And again, this is Thinkorswim. I find it very, very easy to use. Make sure you find a brokerage that's easy to use for you. You have to be familiar so that when you're in the heat of the moment trading, you know exactly how to maneuver through your brokerage account. Okay, so let's go to the next screen. So I just want to show you what I do sometimes, right? So you see here that I'm short Apple stock. I have one share short here, and I'm short at 195.75. I put my stop here at 195.90, right? Here's my stop. I've done an OCO order and put a limit sell order at 195.60. So I'd make 15 cents per share on the stock. What if I say, you know, I think that the stock, I want to take my profit sooner and I want to put my stop tighter. Okay, so all you do, literally click this button, move it up to here, right? Click this button, move it down to here, and you can see that these orders got tighter. So now I have a very tight stop loss of about 2 cents, and I have a small profit area of about 3 cents. Now let's say that I'm in the money on this stock. All right, let's say that my average is better and I'm in the money on the stock. What I often do is I move my stop closer to where the price is and move my sell order closer to where the price is. And I call that squeezing the profits, right? Because you're already in the money. You're already in the money. And what I do is I tend to move these up a little more so that the stock can't go too far and cause me to lose money, right? And essentially, I may not make as much money here because I'm moving my profit target up, but I'm still locking in my gains. And that is so important with this system, is locking in your gains. It really can be done very easily using brokerage accounts like this. So I just wanted to show you how I do it, all right? So we'll go to the next chart here. And you can see here, this is the actual stock of Apple. And let's talk about this. Let's say that I bought the stock right here. I have a limit order buy, and let's say that I did an OCO order. Let's say I put my stop here and my profit taking here. I could literally walk away from the stock, from the computer, and say, you know what? If the stock comes down here, I have such a small stop loss that no problem, I won't lose very much money. And if I get up to these areas here, let's just say that the profit taking level is right here, all right? If I come up to these areas, I'll make a good bit of money. And so that's what these OCO orders do. It decreases the stress, it creates a plan, and it allows you to get up and walk away from your computer. Okay, so very, very important to understand. If you're tied up doing something else, if you have an emergency, you have to walk away from the computer, you can quickly set this and then leave. All right, so this screen is just showing you essentially what I did on the actual TradingView chart just to tie both together, right? So I was looking at the chart here. I said, hey, I want to buy down in here. I want to have my stop very tight, and I want to sell up in this area. And this is essentially what it looks like on the brokerage account, right? Just to put 2 and 2 together. And then the same thing here, right? If I wanted to short, let's say I wanted to short here and put my stop here and then put my profit taking, here, this is what it would look like on the brokerage account, okay? I'm short, there's my stop, there's my average price, this is the current price, and here's the profit taking level. So very important to understand. The most important point of this is to understand these concepts and then find a brokerage that works for you. Find a brokerage that you are familiar with, you're comfortable with while you're trading so you don't make big mistakes, right? So I hope this was helpful, and practice this. Go through, practice this every day. You'll get better and better as you practice. So I hope that was helpful for you. That was the OCO order episode. I know we've done a lot of housekeeping recently, but this is important to prepare you for the next couple episodes where I'm really going to get into how I trade on a daily basis, what I'm looking at on the charts, where I actually put my orders, where I put my stops, why I'm stopping out, why I'm taking profit at certain areas. A lot of this is in the 1 Minute Scalpel. You can see that link below. But there's some other interesting tactics that I'll share with you here on the Market Pulse. So I'll see you next week. I look forward to it. Take care.